How can you invest and make money in today's real estate market? Welcome to the Successful Investor Show, where we talk with successful real estate investors, business owners, and busy professionals on their journey to wealth. They share their best ways and advice to make massive gains in today's market. Make sure you are subscribed so you never miss an episode. Now, here is your host, Doron Nissim.
Welcome everyone to the Successful Investor Show, where we talk about how to passively invest in real estate and create passive income and generational wealth without doing all the work. I'm your host, Doron Nissim, and today I have the pleasure to introduce our guest, Jason Trindade. Hi, Jason.
Hey,
how you doing, brother?
Awesome, man. It's a pleasure to be on the show.
All right. Jason been doing real estate for the past 20 years. He started in the finance space and then moved into being his own broker. He had 45 agents under him, and he did single-family houses, multifamily properties, motels, commercial properties, and everything in between, also owner finance and things like that. So I'm really excited to have Jason on the show. Jason, tell us about your story.
Well, I like sharing my story because I've been through a lot of different things in my my move from going from residential real estate to commercial real estate. And a long time ago, I used to think owner financing as an agent, someone would come to me and say, "Oh, I got somebody who wants to owner finance." They'd be like, "Oh, this is a waste of time." And I had one client who ended up buying 20 houses using owner financing, and I couldn't, it was hard for me to work with him. And I ended up, my first commercial real estate deal was a motel that I bought with $0 out of my own pocket.
Wow.
I was able to negotiate a great deal on that. So I know it doesn't happen often, but I wanted to share that and give some tips on how you can use that. And recently I've been studying the assisted living space and medical offices, and that's what I'm working on right now. So
Financing is a big thing, and especially now in this market, in this economy, I think that can be a big thing right now. So what can you tell us about owner financing, and how do you structure your deals?
On the owner financing side, when you're looking for people that are willing to owner finance, there's a certain segment of the market where you're going to find a lot better luck than you will on another segment. So both of the deals I owner financed were owners that own the property free and clear, and they'd owned it for over 10 years. So I got a net listing as a real estate broker, and I basically asked the owner, I said, what do you want to sell the property for? If I could get you a dollar amount, what is it? And he said, it ended up being 1.5 million. And I said, okay, so if I get you 1.5 million, anything on top of that, I get to keep. So we signed a contract, and that was the agreement. And I went out and I started looking for investors, and I was going to use my equity, whatever I sold it for over, and I was going to reinvest it in the property. I didn't want the commission. I wanted to be an owner of a property. So I, at that point, was no longer working for a commission. I was working for ownership in this motel. And I went out and I was able to find an investor who was willing to put up capital to help acquire the property and do the renovations. I had a $325,000 renovation budget. I had the $250,000 that I was going to make off commission at 1.75 million. And I needed $325,000 in equity invested in the project. So if I had raised, this is a big, really important thing. If I had went out and raised $650,000 in equity, I would have lost so much of my interest in the property because I was only putting in $250,000. But what I did is, and this is a great strategy, to make sure you guys keep this in mind. You don't have to give all of the equity away. You can borrow money from an investor. You could say, well, I'll take $325,000 equity and $325,000 debt. And then that way your equity is only diluted by that smaller amount. What you don't want to do is find yourself in a situation where you only own, 10% of the property, and it's not going to take, you're not going to be that invested into it. I was fully invested into it because I owned a large chunk of the property. It's about 44%, I think, that I ended up owning. But I got 44% of the hotel. And then let me tell you what happened with the investment. So we purchased property in 2018, August 29, 2018. Bought it $0 out of my pocket, owner finance for 1.3 million, $325,000 of equity, $325,000 of debt. And I sold it for $3.5 million last year in March.
Wow,
so,
that's amazing.
Yeah.
So first of all, you found the property through a listing. You had the listing basically. Then you had
and it expired.
So, right. So that's expired listing. One thing. Second, you got it under contract for listing, and then you put owner financing. You found an investor to put most of the cash that you needed to put, and then you end up selling it 2 years later for about $1.5 million in profit, which is amazing.
Great. Yeah.
3 years.
Yeah. Yeah.
Amazing.
So,
that's a great deal. That's amazing.
yeah. It is incredible. So what are the needs in today's market? People need to look at the return that they're getting on their current investments and either keep them there or transition them into other investments. So when I say like fulfilling needs, right now, if you're a real estate agent or if you're an investor, you can go in there and help educate people and add value by saying, hey, look, the values have run up in Las Vegas, have gone up 279% in the last 10 or 12 years, and they went up a bunch in the last 3 years. You're potentially going to see flat growth on your investment from here on out, or it might go down over the next 5 years. So like, you've had a good run. You could take that money off the table and now put it into something else. And if you're raising capital for apartments, multifamily investments, syndication, or other investments, that's how you can present that idea. So you're fulfilling a need, because if you have 7% inflation and you're getting flat growth or negative growth, which is even worse, your investment's no longer working for you. I think that there's a lot of opportunity in the being an advisor and not just a salesperson.
Right. So, giving people more value, teaching them, giving them education. And you're saying taking the money out of one market that's already been appreciated so much and putting it into a different market that's going to appreciate.
Yeah. The thing in the real estate market where it's like everybody refers to the real estate market as like a one. Like, it's not. There's different locations. There's different asset classes. There's, even the years built of things, makes a difference on something. So you got to understand the market and find out where the opportunity's at. And if you don't know where the opportunity's at, the beauty of the internet, now you can type in like, what are the best opportunities in the Las Vegas real estate market in 2023? And guess what? You're probably going to find podcasts. You're going to find posts. Like, it's not that hard. We don't need Chat GPT to find it for us. I mean, maybe ask him. I don't know. But like, if you're not finding opportunity, you're not looking for it. So if anybody out there is listening to this and you're struggling, like, you've stopped struggling when you start looking for the opportunities, looking for a solution. So find out how you can serve people, find out how you can meet a need, and you'll be successful.
Right. That's awesome. So back in 2017, before you started commercial, you were doing residential, high-end luxury. So, and then you had a moment that something that you realized. So tell us about that moment. You told me that before, but.
Yeah. So I was working really hard. I was putting in sometimes 20-hour days. I was working 7 days a week sometimes.
Wow.
And,
hard work.
And when I work on something, I'm like, I'm willing to go all in and put a great effort into it. And what happened was, all my focus was on growth in my business. And my wife basically, I didn't pay her enough attention. And what happened is we ended up getting a divorce. So, it was situation, and I was mad at her at first, but then I reflected back and like, you got to learn a lesson from things in life. And I reflected back and I looked at it and I was like, I'm working too hard and I'm not getting the results that I want. I was actually making a lot of money per year. My annual income, my tax return, I was making $2-3 million a year. My net was like 150,000. But just making all this money and blowing it. Big office, expensive marketing budgets. Like, it looked good. It looked good on Facebook.
On paper.
And people were blown away. Yeah, they were shocked when we were getting divorced. And what I can tell you is that these guys that are telling you like work all these hours and just kill it and crush it because you're going to work 20 hours a day. That's the quantity mindset. If I put in more hours, if I do more work, if I talk to more people, if I touch more people, I'm going to make more money. And I shifted from that to a quality mindset, which is I'm going to be more strategic. I'm going to put together a better plan so that I'm talking to higher net worth customers. I'm finding bigger and better opportunities, and I'm going to have more time for myself,
That's
so
awesome.
I made that adjustment.
So saying
work
less, make more, basically.
Yeah,
and
work less, make more. Funny story is, I would tell you how I made that happen instantly. It doesn't take a lifetime to make a change. Sometimes it just takes, just a moment. And I had 100,000 leads in my database. I said, I'm going to go through that database. And I knew because I had talked to certain people like who had money. And I said, I'm going to take the 10 wealthiest customers in the database, and I'm going to call them and I'm going to tell them that I'm doing commercial real estate, I'm doing investments, And I want to know, if they're in the market, if they're looking for anything, or they'd be interested in what I have, coming up. And the first person I called had $100 million to spend to buy multifamily, $100 million.
Wow.
And they actually were my first, they invested in my first project. So it's kind of funny, like it smacks you in the face. I sold them quite a bit of property. My first sale to them was almost $12 million, 192 units in downtown. And,
Nice.
it was right there in front of me the whole time, but I was more interested in hitting 110,000 leads in my database than I was on the actual goal, which was to close a dollar amount, a certain volume.
That's
so,
awesome.
If you guys have a big database, just like me, go through that database and pull the wealthiest people out and put them on a list and make your 10 calls. And
Exactly. So let me ask you, I mean, we've been talking about great deals. What's the most successful one that you had until now? Which one?
The most successful deal was the Desert Moon, but technically Town and Country Motel, which is the second one I bought that I still own, has been even more successful. And I have it listed for $4.5 million right now, and I paid 1.6 for it.
Wow. Wow,
So,
that's awesome. How did you find that deal?
Motel, same thing, owner finance deal. It was a few blocks down the street from the other one that I own, and there was a broker in the middle who was blocking my attempts to owner finance. And I tried to talk to the owner directly, because I'm a motel owner, he's a motel owner. So, we're talking. I said, when your contract is up with this guy, because I can't, he's not communicating. I'm trying to talk to him and he's not communicating what I'm trying to say to you. I'd like to buy the building, but you have to owner finance it. And that's the only way I'm doing it. And so, just let me know when it's up. And sure enough, like another 3 months went by. And so I had to be patient, patience worked, but patience could have not worked, because sometimes when the market's hot, it doesn't. But it worked out for me. The owner called me back and said, come down to my motel, let's talk. And we did the deal on my terms. And what was crazy is we only had to put down $300,000. So
wow. I
brought an equity partner in. Yeah, my equity partner, some of you guys might have seen him online. He's a podcast guy too. His name is Pasha Esfandiari. He owns Eboat Capital. So he kind of did me a favor. He didn't want to dilute my equity too much. So he put in, I put in 150,000. He put in 150,000. And he did a loan for, I think it ended up being like 425,000. And that was for all the renovations and cleaning up the property. So he didn't take any equity for the 425,000. It was just an 8% interest note. So,
nice.
When you negotiate deals, it doesn't always need to make sense financially. Like, oh, let's split all the money exactly and all the equity. I think that's a mistake a lot of investors make. They're like, I need to, like, what's fair? If people care about you and they want to see you invested in the business, and if they want you to have 50% ownership, then you can break out of those false beliefs that you have to stick to, like, exactly what the money is what the equity is. So, fight for more equity when you're funding a project, if you can. I want to bring up one other thing too, is when I invest in deals, if I'm doing deals where I bring in an investor, I take 50% as the general partner, and the rest is the investors. I do all the work, they put up the money. I don't put any more money into the deals that I do. And I make sure they're solid deals and they're with good partners. But, you write the rules in this game. I know there's guys out there that take 90% of the deal and the investors get 10%. There's contracts that are written where there's return caps. And, you should have return caps in all of your contracts. A return cap limits your liability. I see contracts without return caps, and it blows my mind. So, there's certain things you can do.
That's a good point.
Yeah.
But people don't know. I mean, most of the people that invest passively, sometimes they don't see a lot of contracts.
Yeah. If you're raising capital and you don't put a return cap in your contract, then your exposure to liability is unlimited. So if something goes wrong, there's no stop that says, okay, well, your returns are capped at this. So somebody could claim damages of whatever they want. So probably the one biggest clause that I see missing in a lot of contracts is a return cap. And, if you don't have them in yours, put them in there. Just,
Good. That's
great.
There's
got to be a certain point where you stop, your liability. You don't want to be exposed wide open to whatever, whatever he did cost me $10 million. Like, well, no, you put in 100,000, your return cap was this, like the most you're ever going to get was this anyway. So,
Right.
and it's the
Awesome.
return cap on the total return, not just annual. So,
Right. Total return on your investment. So let me ask you another question. Do you have like a deal that you wish you didn't do, like a bad deal?
Yeah, I had the first deal that I did. I could write a book on the lessons that I learned from this deal. It was a 21 unit older apartment complex. It was by the Stratosphere. It's a 2201 Fairfield, and if you look it up, you'll see I bought it for $1,080,000. I bought it with the investor partner. I had been flipping houses, and I'd been very successful flipping houses, and I thought I was going to carry that success into multifamily. And this is probably a great story for your listeners and everything.
Yeah.
When you convert from flipping houses to flipping multifamily, you need to plan better. You need to plan to use contractors, architects. If you're doing a major remodel, it's different than going to a house. So if you think you're going to pull up and slap a dumpster on site and tear the place apart and throw it back together and no one's going to notice,
right.
If you get away with it, good for you. But most of the time it doesn't work very well. It
doesn't work.
And unfortunately, what happens is there's so many things that happen after that this is probably one of the biggest mistakes I see people making in this industry. And they'll stop you whenever they want to. So you might get partially through demo or all the way through demo or whatever, and air quality shows up and they want to know if you've done your hazardous materials testing. And then when they leave, they call the building department. Hey, do they have any permits for this stuff? And then the building department shows up, and then they shut you down. So let me just give you a little summary of what happened with me. I went in and I was paying tenants to leave. I'll give you some money so that you leave. And
cash for keys.
Yeah. So we got all the tenants out, but we had no plans. We had no permit. We just weren't ready to do this. And the reason I ended up in that situation was because I didn't understand this part of the business, and I didn't put it in the budgets that we were going to have these extra fees for the design and the architecture and the permits and whatnot, because I had never done any development. And it's important to understand that stuff. Not only is it required to have permits, but when you do start construction, things go smoother because you know what you're going to be doing. So
exactly,
kicked all the people out, and guess what? All my revenue's gone. Now that all my revenue's gone, I've just torn the place up so it looks like shit. And I can't finish it because we've stopped construction. So I've got no revenue. I'm stuck in the middle of constructions, and I'm back to ground zero because now I got to do plans and permitting. And guess who wants to buy this place right now in its current condition? Nobody,
Exactly.
Because now you got a non-performing asset. One of the best pieces of advice I can give people is when you're converting into multifamily from residential, if you've been doing it without permits and you have got your own crew or whatever, and you think they're going to roll up and you're going to do that, don't do that. You got to plan better. Because if I had told my investors, if I had told them that we were going to have these expenses up front, I could have collected those and they would have been part of the investment. But I didn't put them in there. So when I told them, hey, before we closed, I said, we should really get an architect and a general contractor in here to do what's needed to be done. And they said, no, we don't want to pay the extra. It was $60,000 for the architect. So that was my fault.
So it all comes down to experience. So when moving from single family to multifamily, it's a completely different animal. And if somebody wants to start doing multifamily, they need to have the experience, or at least partner up with somebody that's already been doing that for years and know everything in the business.
If you're messing with putting appliances and stuff, gas versus electric, or swapping stuff out, just make sure you run that by the electrical contractors and that it's in line with your panels, because it can put you to the point where you need 2 circuits coming in for 600 and 300, and it gets very expensive and it's going to delay your project a lot. So
have to plan and talk to experienced people and see exactly what you're going to do before you get into the project. And I would say even before you even buy the project.
Yeah.
Before that.
Yeah, absolutely.
So, wow, that's a very learning experience. And I'm sure right now, if you go into a multifamily, you'll know exactly what you're going to do. So that's good.
I learned from my mistakes, though.
That's the important thing, to learn from mistakes.
Absolutely.
So, in today's market, about talking about recessions and market going down, up, all this, and you talked about it, but what are the things that you do to mitigate risk when you go into a property or when you're looking into investment?
I'm super conservative at the moment. So like basically being cautious and not getting emotionally tied into something. Like people create emotion in other people by like, oh, somebody else is interested. So like,
Yeah,
that stuff shouldn't matter to you. If somebody else is interested and they're going to outbid you, then then you lose it. But you're going to make the most money on your buy right now. So if you have a good buy, you can make money. Anybody who says you can't make money in this market, that's not true. So if you buy it at the right price, you can make good money. But you want to make sure that you're underwriting the deals with a few things in mind. Potentially expansion on the cap rates. So you might be buying it at a certain cap rate where the market's a certain way. That if you get CoStar reports, you can kind of see the cap rates are projected to expand. So don't underwrite a deal. I see people, they underwrite it and then they've got cap rate going down. Like I'm going to buy it at 6%, but because I renovated it, I'm going to sell it at a 4 or 5% cap.
yeah,
And that just don't do that. If it doesn't work with the cap rate going up, then it doesn't work. So it's like
exactly.
you don't want to be the aggressive guy right now in the marketplace. People that were underwriting deals like that, it worked for a little while, but like it's not right now.
When money was cheap, right now money is expensive.
Yeah, so you want to be conservative underwriting that 2 to 3 more years of negative rent growth or stagnant rent growth in your markets. I'm seeing some signs that we might have negative rent growth here in Las Vegas, and I've been saying this for a while. And a lot of apartment guys pushed back on me saying that. They said no, it's not going to happen. But now we've got occupancy up, we've got the concessions are up, we've got the rental rates they're trying to keep the rental rates where they're at. And it's not working. So if you look at the commercial mortgage-backed securities, we've had a big rise in defaults recently. So and some of the people that recently bought properties, are defaulting. Whatever you were underwriting with before, you don't underwrite with that now. Like let's just assume things are going to be flat or go down. Get some CoStar reports. If you're underwriting a deal, find a commercial agent or a commercial broker that can print out a CoStar report for you. There's if you're part of groups and stuff, you can just ask on a group like, hey, who's got CoStar? I need this report. And fortunately, we have a lot of good people in groups like this, and someone's going to say, yeah, I got you, and I'll send it to you. We have access to them. It takes a broker, 5 minutes to go in and print out a underwriting report or a capital markets report, and they're available for all major markets. And they'll tell you what what everything is when you're underwriting. One great thing you can get from the underwriting reports is if you don't know like the cost of utilities or certain fees, it'll give you the average cost per unit or whatever, or per dollar of what those fees are, like what percentage they are out of the income. So those underwriting reports will help you underwrite the unknown, based on market averages. So I think that's one of the biggest struggles people have with underwriting is they're like, well, I don't have the data, where do I get it? And then it can be challenging. But if an underwriting report will give you everything you need to be able to underwrite it using estimates based on market averages, and it's very useful.
Right. So do complete underwriting and be very conservative right now. It's going to help people to mitigate risk when going into a property. That's good.
Yeah,
that's great.
That'd be it. And then understand what's your exit, have a good plan.
Right.
So your plan is gonna be make the project work or not. And I see a lot of people where they're like, they've got this plan, but it doesn't have a finish line. The finish line isn't clear. So it's like, I'm going to buy this property, I'm going to renovate it, and I'm going to sell it for this much money. That might sound like a complete plan, but who are you going to sell it to?
Right.
And how are they going to pay for it? Because there's different financing programs available. There's different types of criteria that if you're like, oh, I'm going to sell it to a hedge fund. Well, if it's 30 units, they're not going to buy it because they only buy stuff that's over 100 units in your market or whatever. And if you're now you're going to a different type of buyer, who's going to buy it? Is there SBA loans for it? People are going to qualify for it? Do you have the financial documents so that they can get underwritten by a Fannie Mae buyer? Like, who's your end buyer and how are they going to pay for it? Continue your plan on so that you know who you're building it for. Right. Because that's very important, because sometimes I see people and their plans I'm like, well, who are you going to sell it to? And they don't know. but you should, you know?
Yeah, it's part of the exit. You got to know who's your buyer or who you're going to pitch the property to. Yeah, that's good. That's a really good advice. All right, so we're going to go to the fire round of 4 questions. So we're going to start with the first one. So what's your 3 best success habits that you use in your business?
In the beginning, like when I used to work with all kinds of customers and I changed my standards, I moved into focusing on quality, not quantity. And so one of my habits is to position myself so that I'm speaking with people that I can do larger deals with. So I'm not focusing on stuff under $1 million, $2 million. I'm looking at bigger stuff now, 10, 15, $20 million, assisted living facilities, medical offices, still look at some multifamily stuff, but like I'm staying out of the multifamily market currently here in Las Vegas because I'm focusing on the assisted living. Not to say there's not any good deals, but that's my focus on the bigger stuff. So what you focus on, you will find. Tony Robbins used to do a thing where he'd say, everybody in the room look for red. Everybody look around for red, and he'd go, what's blue? And you'd be like, yeah. That's the slightest idea. So exactly. That's one of my habits. The second thing, which ties into that, is when working with high net worth investors or buyers or partners, high net worth people don't want to be sold right away. So if you're struggling with people that have a lot of money and capital, understand that it's a trust building exercise. So they're not going to do business with you until they build trust. So instead of like worrying about selling them on your product, build a relationship with them, find out what their needs are, and just talk to them because it's really important. The lower level clients, investors and people that you can work with, like they might jump into something because they're emotionally like they get excited about it because you did a good job selling on it. But if you want the bigger customers, just understand that it's going to take time and you have to add value. Right. So work on building trust. Think when I'm sending this newsletter out, is this building trust? Sending a bunch of newsletters out complaining about the market or talking about politics and stuff like that, it's not good. It's
not going to help.
Sending out an email talking about right now we're seeing a shift in the market to where people are repositioning assets to produce better results, and then giving an example of some of those, and then giving your expert opinion on what that means to you, and to convey that to them, that you look like an expert and you've actually done some research and you've added some value. Like that's building trust. And then on the bottom of your newsletter, you could put, if you are interested in investing, please give me a call. So like you're not selling. It's not looking like they're being sold. But hey, if you do want to have any questions or want to do anything, feel free to reach out to me. So that's building trust. So just think before you send something out, is this going to build trust? Before you make that phone calls, or I can build trust. So if you call a client and ask them about them and how everything's going, like, are you currently investing in real estate? Make it more about them. If they haven't asked for the sale yet, make it more about them. I'm just reaching out to my clients and seeing if there's any way that I could add value or help you out. If you have any questions, you don't, I'm gonna keep sending my newsletter out. I'll stay in touch, and I would love to help you. So
that's good. That's great.
That was number 2. Number 3 is I'm always learning. So I'm one of the very few people that you'll meet that I completely cut out TV. I don't watch any TV. I don't even watch sports. I disconnected from the programming, and all I do is I listen to podcasts. I go online. I watch like YouTube videos. I watch documentaries. I download white papers online and review them. That's what I do in my free time, and I enjoy it. And you choose where your source of information is. So you can choose to watch TV, but what value does that do for you? So if you like the entertainment and whatever, like that's nice, but don't get sidetracked worrying about what's going on in other countries or what's going on with the president and his documents and his Corvette, because it doesn't matter.
It doesn't matter.
So, like having conversations with people complaining about what's going on in the world, that's what they want us to do, because when we get distracted, find some time. Like if you're watching 4 hours of TV a day, take 2 of that, or all of it if you want to, but take like half of that and then watch some informational documentaries, watch some YouTube videos, listen to some podcasts, engage in the business that you want to be better at and learn from. And I think we could all do that, So
yeah, that's good. That's a really good habit. I mean, dedicate one part of your day, even 10, 15, 20 minutes of your day to learn, improve, get more insights of what's going on in the market or things that you want to know. It's a really good habit to have every day doing that.
Absolutely.
Yeah. So the other question that I have for you is, what's a good resource that you use in your business?
Part of the Rod Cleese Warrior Group. So I've been part of that, and that's been, it's been helpful. There's a lot of different groups out there. I think each one is good for a certain reason. It helped me accelerate my growth through the business in the beginning. I haven't done it as much in the syndication department because I haven't been as aggressive lately with the multifamily acquisitions. So it's not as relevant as it was to me a little while back. I kind of getting into like the medical facilities and assisted living. I'm kind of breaking away from that, but it was very useful and helpful to get into the business. And I highly recommend, anybody that, is looking to get in this business to join a group.
Right.
Whether it be, the group you have or Broccoli for anybody, like join a group where there's people that are doing more than you, that are doing better than you, that are going to inspire you, and go into it with a mindset of abundance. It's not scarcity where you're like, oh, that guy's doing better than me, I'm going to get him, whatever. It's an environment where everybody helps each other, so
right.
Find a good group.
Group masterminds, groups, Facebook groups that teach you, and they can help get to where you want to be. That's a really good resource. Right now, you can find them everywhere, and it's a great way to start where you want to be.
And if you have no money, there's the Facebook groups are free. But if you want to go a higher level in a smaller group, then you spend some money, and you'll definitely notice that as you spend money to be in more exclusive groups, that it does get better. So I wouldn't knock investing in yourself into a group that's more exclusive and smaller, and where you get better help.
Definitely.
If that helped, it helped me. So
definitely. All right. So the next one is, what are your 3 tips for making money in real estate or any business in general?
Number 1 is you need to have a process that works. And I came up with this 3-step process that I use for business consulting. I do a lot of business consulting. I didn't really mention that, but basically, you need the 3 P's. It's purpose, process, and pressure. So purpose is where you get your energy from. So if you don't have purpose, if there's no purpose in your business, you're going to run out of energy. You're going to get burnt out. You're going to hit some obstacles, and you're going to give up. And that's what happens to a lot of people. They're lacking purpose in their business, and they run out of energy. The process is your plan. You have to have a good plan. So like what I was talking about, have your plan so that it actually, it's full circle. It ends up where you want to be, and that there's a finish line to it. So if you have a plan that's not good, what you might find is that you're working really hard and you're not getting the results that you want. So you have to go back and look at your plan. So if you've got the purpose and you're working really hard, and if you got that drive and it's not working out, look at the plan. If you don't have a plan, you got to make one. Because the plan is literally one of the most important things. And if you're struggling, just look at what it is and see if it makes sense. Share it with other people. Run it by them. Make sure your plan's specific too. So like, I'm going to target investors and raise capital from people. I'm going to give you guys a great bit of information. Okay, so if you're looking for accredited investors, okay, where are you going to find them? Where are most of them at? So I did a case study. I'll share it with you. You can share it with people if you want. But basically, there's over 1 million physicians in the United States. Okay, doctors. I found them to be some of the best accredited investors, and I'll tell you why. Over 1 million physicians, 51% of them have a net worth over $1 million. Okay, the average income of a general physician, so general practice, is around $278,000 annually. Orthopedic surgeons, $600,000 annually. Neurosurgeons, over $1 million. So what's interesting about that is that if you're communicating and selling to a group of people that over 51% of them are accredited investors, it's not like, how do I find accredited investors? Well, they're right there. They're physicians.
Right. Your success rate is going to be much higher.
Yeah. So when I talk about plan, make sure your plan works. So if you're like, man, I've been calling on the phone, and I'm struggling with this whole accredited investor thing, and I haven't been able to raise capital. Your plan, maybe you're not targeting the right pool of people. If you're just targeting all investors, that's not a good plan. That's everybody. And unfortunately, everybody's targeting all investors. So those leads can be expensive. The physician market and doctors, what I found out more, so I'm going to get even more details. You want better than 51% of people that are accredited? Well, the majority of the wealth is actually built after the age of 45. So a lot of doctors that are under 45 actually are not accredited. The majority of them after 45, we're talking like 90% of them are accredited after 45.
Wow.
So if you target physicians that are between the age of 45 to 65, so they're not retired yet, but they're still working. And if you target them, you have like 90% of them are accredited. So
Amazing.
Anybody whose excuse is I can't find a credit.
Here you go.
The other thing too I found out is that the average retirement age is 65, and with the retirement age of 65, 40% of doctors are between the age of 55 and 65. So 40% of the workforce of doctors are going to be retiring in the next 10 years. So retirement's on their minds. So when you call that, if that's the target, the group you're targeting, it's probably like 95% accredited, and maybe even 90. I mean, it's a crazy number. But if they're thinking about retiring, then retirement's on their mind. So if you have a message that resonates towards retirement and towards secure and safe investing and planning for their future, it's going to resonate really well with that particular group of people. So when you start to drill down and be very specific in your plan and who you're going to sell it to, number one, you can guarantee that you're talking to the right people that are qualified to buy your product or service or invest. And then number two, you can tailor your message to be very specific to that group of people. So when you know what they're thinking and what's on their mind, it makes it a lot easier to conversate with them. You don't call these doctors that are about to retire and ask them if they want to invest in some, multifamily syndication, speculative investment or whatever, like they're just not going to be interested, but when you call them, and so you're not leading with like multifamily, like those words are just not going to resonate with them. What's going to resonate with them is, are you planning for retirement? Here's what some other doctors are doing around this age to secure their wealth for their future. So you tell our message that that customer, and it resonates better. So hyper specific marketing has been a huge part of my business.
Awesome. That's really good. So the next question I have for you, the last question actually for the day. So for people that have a full-time job or they have business that takes all their time and they still want to invest in real estate, what's your best advice for them, for these people? Number
one, don't invest in anything where they won't provide you with any financials. So
that's good. That's important.
I've been doing some research and looking into some companies and different businesses, and come across some businesses that are raising capital and not sharing any of the financial information. And I'm not mentioning any names or anything, but I don't feel good about businesses that do that, because someone like myself who really understands the business can go back and reverse engineer a whole business, and I can figure out what you paid for the property and how much it cost to get it to construction, what the construction cost, what kind of loans you got, who you borrowed them from. So I can rework everything. If you don't tell me, I'll figure it out. And so when you have businesses that are not willing to share the financials with you, that's not normal. And that should raise a red flag. And if somebody says, oh, it's okay, don't have an attorney review it, everything's all good, it's not. So just be cautious. So the number one thing is you can lose everything in one deal. So be cautious, make sure that you've had everything reviewed and that you understand what it is that you're investing in. Understand who the team members are that are investing in. Do they have experience? Understand the financials of the purchase and look at it and it makes sense. Because I think we're headed into a market where some people have gotten into the business that don't have a lot of experience and are raising capital in a very difficult and challenging environment. So there's opportunity in this market, but you got to be with the right people. And but my number one advice is just make sure that you've got enough information to review and make sure that you're thorough in your due diligence before you're sending hundreds of thousands, if not millions of dollars to somebody.
Right. So there are a lot of opportunities for people right now, and the market is going to give us a lot of opportunities, but you have to make sure that you do it with the right people, the right team, with the right experience, take all information you can and even send it to professionals, your CPA, your attorney, and people that you know that you can trust. They can check the deals and make sure they are legit and they are good deals.
It's a commitment, and most contracts, most subscriptions say you can lose everything. So
right. Most of them.
Yeah, it's a reality. But like, you can do good in these, but just understand that there's two things you can compare. You got the marketing material and whatever's being told and said to you through email and writing and their website, and then you got the contract. So as you're being promised things, write down all the things that you're being promised. Just write them down, and if they're in writing, circle them on it. So keep track of all the stuff that you're being promised. And then when you get the contract, look at the contract and see if that stuff's in the contract. So you need to keep those two things separate, because what's said and what's written, what matters in court? What's written, what's said doesn't matter. So
very important.
That's how you can protect yourself. That's advice for everybody, no matter what you're doing. If somebody's trying to get you involved in their business or what you do, or somebody's trying to get you to invest, write down everything that sounds good. General partners are putting in this much money. Okay, cool. I'm gonna write that down. When I get a chance to review everything, I'm gonna see if that's in the contract. I'm gonna make this much return. Like, you guarantee I'm gonna make the return, or I'm supposed to make the return. But just
very good.
Write it down, and just be cautious. You can make money, 100%. I'm fully supportive of all the people doing good business out there. But those people will give you the information that matches what they're selling, and they respect their word and their name, and they're out there. So just make sure you get them.
That's great. That's a good advice. Very good. All right. So that was amazing. Thank you so much. And now people, if they want to get in touch with you, get advice, get a connection with you, how can they get in touch with you?
My email is jason@proximitycapital.us. My name's Jason Trindade. You can search me on Facebook and feel free to message me. I have a website. My website's in the middle of being updated. It's tailored more towards our Las Vegas real estate fund, where I've been specifically working in multifamily. But I'm in the middle of selling that last asset and winding out of that. If you do reach out to me, if anybody, I do business coaching. So, if you're in the business and you want to talk to me for half an hour or an hour and kind of break through some challenges that you're having, I'm open to do that. That definitely helped quite a few people get from where they're at past it. I strongly believe anybody can do anything, and the sky's the limit. So, I enjoy doing coaching, and I have a lot of success with it. So, that's probably the biggest
awesome.
If you want to reach out to me, that'd probably be the best thing for
That's awesome. I'm sure people will reach out to you, and this is what we do. We make the connections. So that was a great episode. Thank you so much. Thank you for sharing all your successes and advice.
Yeah, thank you. It's my pleasure. I thank you for the opportunity. It's been awesome.
How much?
All right, thank you.
All right, bye-bye.
Thank you so much for listening to this episode of the Successful Investor Show. If you're enjoying this podcast, please feel free to rate, subscribe, and leave a review wherever you listen to your podcasts. That helps others find the show, and we greatly appreciate it. Once again, thank you for tuning in, and we hope you'll join us on the next episode of the Successful Investor Show.